Hello. So sorry about the 2 minutes delay, guys. This will be our 20-second stream. So let me check the audio first before we start off anything. Hello. Hello. Very weird sound. Hello. Mic test. Mic test. Hello. Mic test again. Hello. Hello. Okay, so we are back online. So hopefully, guys, you can see me here on screen. I mean, the charts here, right? Okay, so we are back. I hope that the audio is fine at your end. On screen. I mean, the charts here, right? I hope that the audio is fine at your end. Okay, so at my end, it is looking good, and if you guys can see the screens and hear the audio fine, because I have changed the audio settings a little bit, and kindly let me know in the comments section here on YouTube, or if you are watching on TradingView, then on TradingView. But without wasting any further time, because of the audio issue, we had to waste a little bit of time. Let me just get started with the formalities. So here on screen is the disclaimer suggesting that all content presented here is purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purpose, then you yourselves will be liable for your profit, loss, or loss of profit. And we do not take any liability for any activities that you might convert do using this information. Rest you can read on the screen. Okay, I believe that's it for the legalities. So let me give you a quick introduction, guys. My name is Nirav, and I'm the admin and owner of 50 Eyes com, which is a website where I have been sharing my views on the markets for last 7+ years. And a little bit more about my work. I also run a YouTube channel called 50 Eyes Market Analysis. The handle is at the rate, or whatever the YouTube guys are calling this, at the rate of 50 Eyes, and the channel name is 50 Eyes Market Analysis. This webinar is the 22nd webinar in the series of trading opportunities webinars, which, as the name suggests, are webinars in which we discuss trading opportunities on various markets. All right. So, furthermore, hey, Clever, uh, thank you for the confirmation there. So, as I was saying that this is the 22nd webinar in this series of webinars. Generally, we conduct 3 webinars per week, and the order is Monday, Wednesday, and Friday. So these are the 3 days we conduct the webinars per week. Timing is 2 PM GMT, right? And apart from this webinar, continuing with the introduction, also like to mention that I'm the author of the book called Think with the Market: Secrets to Achieve 80% plus accuracy using Elliott Wave, which is available on Amazon Kindle for instant access. That is, it is electronically available if you would like to read more of my work. Moreover, my area of expertise is Elliott Wave, which I have been using with exceptionally high level of accuracy for the last 7 years. And since 2016, I have kept a track record of all the analysis that I have done publicly. And as you can see over here in the spreadsheet, 2016 my accuracy was 83.34%, 2017 was 87.5%, 2018 was 84.61%, 2019 was 84.88%. And by the way, you can just scroll down in these spreadsheets and check the date, the instruments that were discussed: crude, gold, S&P, Nifty, Reliance, silver, etc., etc., and then check what was said about the instrument and what happened. Moved as expected, moved exactly as expected, etc., etc. And this is the link for the videos. Again, continuing forward, 2019 again 88.52, and 2021 82.22. So as you can see, for this 6-year record that I have, the accuracy has remained higher than 80%, and I'm showing it off to just show you guys that my work beats literally all industry records, because generally even an accuracy of 60% plus is considered very high, where I have 80% plus for 6 consecutive years. And 2022, which is the year we just passed, as I have not been able to compile the accuracy for it. I haven't had the time. But anyways, I think 6 years is quite uh, enough of a accomplishment to show off. Right. So this was about my work and my area of expertise, how good I am. And additionally, if you would like to learn more about how I do things and how you can do them for yourselves in your own trading, you can go through my video course. And if you are in my video course and have completed it, then you can enroll in my upcoming batch for training program LT, which is basically personal classes. And that is about all for my introduction. Let's now head over to the webinars. So the webinars are connected in the specific order. That is, first of all, we'll go over the chart of Euro USD, followed by EURCAD, EURJPY, USDJPY, EURJPY, crude oil, gold, S&P's 500, Nifty 50, and then Bitcoin. Every time I have completed discussing a chart, I will ask you guys if you understood it, and if you have, you can kindly confirm the same in the Don't mind that. I was just checking my audio again. So if you guys have any doubt, you can just let me know after the discussion of a chart is complete in the comment section, and I'll make sure to take your queries. All right. So with that out of the way, let's head over to our first chart, which is the chart of Euro USD. So in this chart of Euro USD, as you can see over here on screen, I was saying last time that the downside movement is there, and the downside movement can be big or it can be very small. So I was not taking any shorts, because we had some running trades in USDJPY and EURJPY, which were extremely successful. The movements were very big in our direction, right? But that aside, let's look at towards the current development in this chart. So first of all, I like to point out quickly here that we now will have to consider the alternate possibility on Euro USD. That is the new count in play. By the way, people who are online, if they can confirm one more time before we get into the discussions of charts, that if the audio is clear enough and the visuals are good enough at their end, because at my end it is looking fine, but it's always better to get the feedback from the actual audience. All right, I'll just continue. If you can confirm, that will be better. So first of all, I'm pushing out an updated outlook, mm, not necessarily a confirmed count as of yet. Thank you, Clever, for the confirmation. So not a confirmed outlook at our end yet, and let's just discuss what this says. So this is the alternate view on Euro USD, which is suggesting that upward movement can continue on this counter. And if the upward movement is going to continue on this counter, then we will have to assume that this market is going up as an impulse in the Elliott wave formation. Those of you not much familiar with that, just quickly point out that the impulsive progression would look like this: leg up, second leg down, third leg up, fourth leg down, and then the fifth leg up. So this is what we call an impulse in an Elliott wave progression, right? And if you look at the actual chart, this will be your one up, this will be your two down. This is what I'm considering the three up, the four down, and the fifth up, right? However, as I said, we do not have confirmation. When does the confirmation come? Thank you, Madhavji, for clarifying that the audio is clear on YouTube. So getting back to the point, confirmation generally does come at the break of the or near the break of the last high, right? So basically this means that even if this count is correct, we would be very aggressive in our approach if we go long right now. Secondly, there is another point to consider here. Wave 4 can go to this particular level, which is around 1.03547, roughly speaking. And keeping in mind that the data feed I'm using will have different level than the data feed you are using. IDC is the data feed I have. So it is possible that even if this count is correct, that we will first see a move till this level before the market starts upward movement or proceeds with any upward movement. So based on that, Euro USD just again, I'm not soliciting any trade right now on this. I'm personally also not in any trade on Euro USD. And this current analysis suggests two things. First of all, if there is a bullish movement to come in Euro USD, then either it can go down first and then up. And how much it can go down, we have just suggested that level, right? Secondly, we know a few more things now. If we think that the market should reverse from this level of around 1.0360, roughly speaking, again, then if the market goes much below this level, let's say somewhere here, then that will be suggestive that the upward movement is not going to come into play, and then the bearish count, which we have been discussing for the last many webinars, will be the one coming into play. So this gives us a very clear what do you call bearish outlook, that if the bearish count is to play out, we now have a proper understanding of how it will play out, and we also have a way of taking the trade in that regard. Okay. And as far as the bullish things are concerned, as I said, we are not interested. I'm not interested particularly unless we take out the high around 1.0726, whatever this last high is. Right? So these are the two main outlooks on Euro USD. I have suggested the updated count and the past count, which suggests that an upward movement has been complete. It's already on screen. Triple zigzag correction. We have discussed it way too many times, so I'm not going to discuss it again. If you want to check out the bearish outlook, then just check the 21st webinar, right? And you can do so by quickly going to my YouTube channel and hitting on live. All the webinars that I've conducted are here: 21, 2019, etc., etc. So just check this one. We have discussed the triple zigzag in this, basically all the last 2, 3, 4 webinars. That's my take on your USD. Let me know, Madhavji and Clever, if you guys are able to catch what I was talking about here. If you were, type in clear or understood something in the comment section so that we can then move on to the next chart, which will be EURCAD. Okay, so it looks like there have been no doubts. So let's just start off with our discussion on EUROCAD. On the chart, as you can see on screen, we have achieved our target 2. This target 2 level was is at, by the way, 1.4264, and it was suggested right at the break of the channel over here, right? So our first suggestion or the first target was this blue line, which was at 1.43876, and the second level was 1.42628, right? So the first one was the easier one because we had a higher level of certainty that that the minimum target will be achieved, right? The second one was a little bit less of what do you call second one was one second, yeah. So the second one, as I was saying, was less likely because of the reason that we were considering a bullish outlook also on this counter. However, at this point in time, I see that it has achieved that and it is crossing below it. And also, there are some news events currently going on. Some have passed and some will be coming in the last next few minutes, right? Which will be concerning Canadian dollar and US dollar. So that might lead to some sharp movements. But leaving that aside, currently what I'm seeing on the chart is that it is not only going below the target to, it looks quite solid here. Like solid, I mean strong, basically. So if that remains to be the case, let's say it goes to 1.42057 with this much strength, then we will have to consider our previous analysis, which was suggesting that a WXY may have completed. So the WXY may have completed. Let me just quickly tell you what the count was. So the count was basically this. We were expecting previously, as per our understanding, that this is the count which was followed by this market. So a WXY correction in Elliott wave terminology basically suggests that after the completion of Y, there will be a downward movement, right? So the downward movement can be very aggressive, something like this, or it can be small, something like this X. So it has already done the something like this X part. Basically, what I mean by that is it has already given a movement comparable to the previous correction of wave X, because if we can measure the points or pips, it has already given that much pips, right? So the minimum in that sense is also complete. So furthermore, if it falls, then it will be suggestive that maybe it's in for a major letdown, right? So that's a possibility. We need to keep that in mind if you are trading Canadian related pairs, right? That the possibility of a major turn might have just come into play, and it might do something of that sort. Again, as I said, I do not have the confirmation for it, but possibility is what I wanted to discuss here, right? So that possibility has now opened up, and other than the small targets which we were able to achieve, this might be the new thing. If it goes down furthermore and I get some clear setups, I might pull some trades. But for now, I'm not interested in holding a very big position for a swing trade of this magnitude because we don't have confirmation yet. So I want to discuss the possibilities on EUROCAD and also show you guys that our past analysis has played out precisely. Okay, so before we move on to the next chart, USDJPY, first of all, guys, let me know if you were clear on this discussion and hit the like button on YouTube and rocket button on TradingView. And also let me know if you guys were able to capture any of these downward movements which we have discussed so far, Euro USD as well as Euro CAD, right? I'll now load over the chart of USDJPY. There it is. So USDJPY, last time when we discussed this chart, first of all, I like to mention that, okay, uh, thank you for the comment, Clever. So USDJPY, right? So first of all, USDJPY, when we discussed it last time, we were of the view that this market should go lower, right? Not last time. I should have mentioned last to last time, because if you are not following me for the last few webinars, I like to first of all mention that we have been able to capture this whole leg down, right? Like literally till this point, our target minimum. Right? So after that, our target was this purple line, whatever the exact color is called. Now what has happened is market, when we discussed this market last time, which was the webinar which was conducted on Wednesday, 4th of January 2023. On 4th of January 2023, the market was trading around somewhere here, right? So when we discussed it, I mentioned, one second, let me see. Okay. That's the problem here. Sure how that happened. Okay. Now we can check it. Okay. So the market was somewhere here, right? And it has already, nope, it was not there. One second. Just give me a second, guys. Let me check the exact time there. Okay. Somewhere here the market was, and we had already discussed that because the target minimum is achieved, partials should have been booked already, and the remaining you should trail. So what happened is that partials, who if you had booked, you had booked, otherwise the remaining trail has definitely been hit. There is no doubt about it, right? So now a few things we will need to do is, first of all, we'll need to reevaluate the situation if the downward target is still in play or not. By the way, if you guys were able to capture this leg USDJPY, which was by the way captured very near the high, we were able to capture it almost near this peak, then definitely let me know in the comment section. That will be nice for other viewers to know. All right. So anyways, moving on with the current situation. Now that it has gone and moved higher and above the important level of 134.49, so it is possible that this wave down may have completed, right? Again, I'm saying may have completed because there is again not enough confirmation for an upside movement for me. So we were able to capture this leg down, but we are not going to go long until we see a move at least above 137.423. At least that's my personal opinion, right? So USDJPY, because I'm thinking more downside may be happening, and even if there is upside, we don't have confirmation. So it's basically a wait and watch for now. So hold on to the profits if you have made them, and we wait for either a break above 137. I'll just quickly place an alert there, or we wait for a move in the downward direction. This, by the way, is not a trade alert. This is a alert for me to reevaluate the situation. So once the market takes out any of these levels, either this level on the upside around 137.32 or 131.32 on the downside, we will be reevaluating the situation. On the upside, that level actually does suggest some possibilities of upward movement. That is, I can possibly pull a trade if the upside level is taken, but not so on the downside. So USDJPY, that's my take here, right? Next on, we will move on to the chart of EURJPY. What about you guys, Clever, Madhavji, Steve? If you are able to understand whatever I'm discussing here, let me know in the comments section. And I'll take a few seconds before I load up the next chart, because I'm noticing there has been a significant delay in the time I speak something and it reaches to you. So maybe that also is causing less, is also the reason for this responses. Tradingview.com. Apology for the feedback there. Case. Okay. So let's head over to, thank you, Steve, for the confirmation. Let's head over to our next chart, EURJPY. It has done something similar to USDJPY because you know why, they have high correlations, of course. So what we discussed last time was, and by the way, I'll just like to summarize a few things before we move to the current scenario on EURJPY. So first of all, we were able to capture this whole leg down. If you are not following me in the last few webinars, this whole move down, literally, because we had already predicted that below this red trend line, this will be a sell, and the target minimum was here at 138.81. So this whole leg we had captured. This was the safe movement which we captured, right? And after that, the expectation was that if it wants to continue, it will go to the next target, which is at 135.963. However, what seems to have happened is this market has gone up, right? So now let's reevaluate the situation and see what has happened. So it looks to me like further downward movement still cannot be relegated, and the reason is that we can still look at the movement from this point of reference as a first leg down and this as a flat correction, right? So if this is a flat correction, then the characteristic trait is that after the flat correction is complete, the market again moves lower than the starting point of the flat correction. So that means lower than the wave one low. So in that sense, this market still has more downside remaining if that's the count, right? So other points that we need to keep in mind is that if this counter goes higher than this target, not target, this trigger of 142.711, again I'm using the FXCM data feed here. Your data feed, if it's different, will have different level at the top. You know what I'm talking about if you trade these things. So anyways, continuing on with the stuff I'm talking about, if the market takes this level higher without making any downward movement, then I will be hesitant in calling this as continuation of the downward movement, because at that point, if something like this happens basically, then that means that something else is happening and the count we have on chart is not the one being followed. However, not really an issue. We have already captured a very big movement here. As I mentioned, this whole leg down, we have already captured it. So what we need to do now is, by the way, let me just quickly check in proper, yeah, 308.1. So this much we have captured, right? So what we need to do here at this point is we need to wait for either this alert to the upside or for some sort of what do you call strong downward movement, not necessarily going and taking out the low, but strong downward movement which suggest basically a change in behavior, that the bulls are becoming more aggressive here, right? So for the upside or the downside, it's just a wait and watch, just like USD JPY here. Again, that's it for EURJPY. Next, we'll move on to crude oil followed by gold. If you have any doubts, you can just type them in the comment section. And if you have not yet hit the like button, please do so. That definitely helps me grow the channel and reach more people. And before we move to crude oil, I like to make a request that once these webinars are complete, please share them with at least 3 of your friends, colleagues, or circles. If you have a Discord channel of traders, a Telegram channel of traders, or Slack, or or whatever you guys use, WhatsApp or whatever, right? Please share it in those groups regularly, and that will make sure that we keep getting new participation here, right? So let's now move ahead with our chart of CL or WTI crude oil West Texas Intermediate. So you should be able to see on screen now the chart of WTI crude oil, right? And at this point, let me just quickly give you a quick rundown of what we are following so far, right? WTI, one second. So far, from this point of reference on this counter or WTI crude oil, our analysis has remained that this is following a flat correction, A up, B down, and C up, right? So if you were not following our analysis for the past webinars, like 5-7 webinars, I'll just quickly mention we were able to capture this leg up. We were able to capture some part of this leg down, not the complete part, some part of it, and multiple other movements, right? However, the current analysis was a little bit confusing, like near the very end, because we had a false trigger over here, right? So anyways, that was in the last to last discussion which we discussed a possible long which did not play out. So anyways, the things at this point look more bearish to me than bullish. Previously we were thinking that this down leg might see a reversal for the continuation of C. However, that looks less and less likely as time goes by, as more price actions is visible on the screen. So right now my thinking is that C may have completed itself over here. If wave C has completed itself over here, then we are going to see further downward movement. Basically we should see a movement lower than 70.351, a little bit lower than 70.351 in principle will prove our hypothesis correct, right? So what do I do in such a situation? Currently see we already missed this one, right? So we are already quite late. So adding at this point will mean a swing short, because if you add at this point you will have to consider the possibility or the alternate view, even though it's less likely that the C is still continuing, but you still have to consider that the wave C up may be remaining. So swing shorts, if you add, you will have to hold higher stop loss, technically speaking, and that's too much for me. There are better opportunities at other places right now. So that's why I'm gonna leave this one and wait for it to show some more bearishness near the low of the counter. I'll see how the price action develops, and somewhere around the low or maybe at the break I'll take a breakout trade or breakdown trade, whatever you would like to call it, right? So there are possibilities developing. I'm only interested in bearish trades here, no bullish trades at all for me now on crude, at least for at this point in time, unless of course I'm proven wrong by the counter here, right? So crude oil, as I just said, heavy possibility that C is already complete here, right? And more bearishness we expect. Nothing new to add here. Let me know, guys, if you are able to capture my vibe, capture my understanding of crude before we head over to the next chart of gold, followed by S&P and Nifty and BTC. Steve, Clever, Madhavji, where are you guys? Or is the feed not working? Anyways, I'll just load on the chart because I believe there is always a delay in the audio. Jill, how are you? Thank you for the feedback there. So gold 33.53. So gold, thank you Steve for the feedback. What we had been seeing in gold was that it has followed our ground pretty well so far. And if you have not been following me for the last few webinars, again I'll just like to show what we have captured. So first of all, we were able to capture this move, like literally this move from the turn to near the high, near this level. Right? Then we have been able to capture this leg as well, and some part of this leg, some part, not the whole of it, right? So pretty much we have been in the right direction so far, and we have been able to capture multiple parts of this movement, right? So that's why I'm keep saying all the time, if you guys want to follow these trades, you have to attend these webinars live. No, not much point in watching them as a recording, because we are discussing things in live market, and sometimes the trade setups will develop, and by the time you try to watch it as a recording, they will be already gone. They may have already achieved the target or whatnot. Okay, Clever, that's nice to have you here. Hope to see you next time again. Same to you. You too have a good weekend. So, anyways, getting back to gold now. Currently, what I'm seeing over here is one up, two down, and three up. So this is the count we updated in the last webinar, right? And there's nothing new to add really here. I'm just reiterating myself because some people might have joined today itself. They may have not watched the last few webinars. So what we expect here is that more bullishness is what we expect here for the wave 3 higher, right? Currently, I'm not very convinced with this price action. It looks more, what do you call, corrective rather than impulsive. So I will be much interested in it if it takes out the last high, let's say 1860 plus. And another reason for not currently entering is that if we are really correct on this count, wave 3 generally are going to be quite strong compared to the previous waves. So if we are in the wave 3, then there is really not that much of a hurry. Yeah, there is the point where it moves so fast you are not able to enter the trades. That's there. But if you want confirmation, we have to wait, and that also comes with the risk of losing the opportunity. So as you guys already know, if this is a wave 3, generally we measure this leg, right? And we project the equivalent length for this leg. So you can already get the idea it can go much higher. So that's why I'm saying if the count is right, then the opportunity uh, will be presented to us in due time. So that's why I'm not really taking longs on this counter right now. And for the targets, we already have the red levels marked. The immediate target is 1878 followed by 1925 followed by much higher levels. So again, as I said, I'm not very happy with this price action over here, so I'll wait. And on the case that this count proves to be incorrect, I'll take that as a possibility if it moves below 1797, right? If something like this happens, then we will consider that this probably is incorrect and we will update the counts. So that's my take on gold here. This counter is for me a wait and watch. I have discussed both scenarios here. Let me know, Madhavji and Steve, Jill, if you guys were able to understand this, and we'll then move on to the interesting chart of S&P's 500. Very interesting chart, followed by Nifty and then Bitcoin. And one thing, I'm using a different mic setup because the one which I regularly use was having some sort of issue. The microphone was sounding very heavy. So if you can also provide me a feedback of how this one sounds compared to the past webinar sounds, because I'm not sure. The setup which I generally use is quite expensive. This one is comparatively very cheap, but at least it's not giving me that heavy noise issue. Not noise issue, heavy frequency issue, I think. Okay. If you have any comments on that, if you have been following the past webinars, let me know the feedback on this. It's clear and better. Well, that's good to know. Okay. Thanks, Jill. Steve is saying good quality. Thank you, Steve, for the feedback. Okay, in that case, let's head over to the important chart of S&P 500. So if you guys remember, I was saying the interesting chart, right? So the reason is that the manipulation is on this counter is quite aggressively done. So what I will just explain to you what I'm trying to say here. So see, first of all, our analysis suggests that from this point we have a triangle, right? Of course, we may be right, we may be wrong. Only the market can tell us that. Now, this means that we can draw two trend lines, one called the AC trend line, one called the BD trend line. And then the setup becomes that once the BD trend line is broken to the downside, this is the aggressive setup, by the way, guys. BD trend line breaking to the downside is an aggressive setup. Generally, you want to wait for the D trend line break, and the actual confirmation trade is at the B trend line break. Sorry, not trend line, B level break, right? But the thing is that the more confirmation you wait for, the bigger the risk you take. more confirmation, bigger risk, more confirmation, bigger risk, right? So what I was saying was that it is interesting that this manipulator is actually using all this information against the traders. You can see he seems to have taken the market down. Obviously, there was a news event here. I know on news events spikes happen, but this chain of manipulators or this group has done it multiple times on this counter. For instance, previously we were considering this as the possibility of the triangle. So at that point, they produced spikes in the upward direction. Then when the updated count happened, now they are producing spikes in the downward direction. So whichever this group is, you can see, if we forget about Elliott wave for a second, this is interesting to note here. See that this is what is this, like 3880-ish levels, right? So first of all, they sold the market at 3880, and then they created a support at 3780, right? So basically 100 points range, almost, roughly speaking. Like next time when it went near that range, you can see this aggressive sell off. So they have literally tried to defend that on the upside. They did not want it to go higher than that. When it did go higher than that, it saw even more aggressive sell off, right? Taking it near the last low or the last support, which was 3780, right? Now see, again the market tried to test the last resistance, 3880, and again it could not pass it and saw a sell off, right? And this time again a severe sell off here. Now, interestingly, generally these many attempts are enough to take the market lower or higher, whichever direction the market chooses. But in this particular case, these group of manipulators have been able to hold it for quite some time. So see, what happens with these kind of things is when the movement actually happens, the movement is going to be, or is supposed to be, in my understanding and experience over the years, very, very strong, right? So they have been able to hold this for this long with this many spikes, right? So I am hoping that whenever it does take the direction, again, our consideration is that the downward direction is the trend. But if we are wrong, the upward direction, even if it takes that, it will again, or it should be strong, right? However, in this particular case, let's get back to our analysis, right? Let me know how was that small, what do you call, discussion on supply and demand and manipulation, or whatever I was talking about there. If you were able to catch it, did you like it? Because it was sort of outside the scope of our discussions. We generally just discuss the trading opportunities here. So getting back to our agenda here, see, it still is holding those levels. If we remove these trend lines and this triangle, it is still not going below the 3780 level, uh, which we had previously discussed, right? This support level, sorry. So it is still holding that. So from a supply and demand perspective, this still looks like it is unclear. And I personally still think that even though the trend, in my understanding, is down, I will still call it unclear a little bit, because, as I said, these guys have been able to hold it for so long. It is possible they hold it for a few more sessions before letting it fly in the upward direction or the downward direction. We shouldn't probably call the downward direction as a fly. Uh, Maybe the crash, but crash is too aggressive. Anyways, you get the point. So, concluding the analysis here, nothing really has changed from the Elliott wave perspective. It could still be the wave. E could be the following. E itself can form a triangle in the E itself. Sorry, incorrect wordings there. What I was trying to say was, in a triangle, the wave E itself can become a triangle. So if that's the case, then this will be the A of the E and the B of the E, the C and the D and the E. And again, keep in mind, the E does not have to be very sharp or big, and E of the E does not have to do anything of that sort at all, right? So in that sense, it could basically just fall from here if it really wants to, right? So first trigger, as I said, if you are aggressive, wave D low can be good. But as I said, these guys have been able to hold it for so long. It would be probably better if we get a little bit more confirmation. Something like wave B break would be better. But again, I will not suggest anything here. You guys know the math changes very quickly. You want more confirmation, you get less, less risk, higher risk, sorry. And you want less confirmation, you get less risk. So nothing really to hide here. S&P is 500, and if the counts are correct, then this is the expected movement here on this counter, right? Maybe a little bit sideways drama it will do, and then down. If we are wrong, we are going to see it above the wave C high until it does break that high of 13,884 something. I don't think we should care for upside, right? If it does break that, then we will be serious about upside. Yep, and some other news event was also there beforehand. Steve. Oh yeah, guys. So enough time spent on S&P 500. Let me know if you were able to understand all this. Next, we will move on to Nifty followed by BTC. And again, if you guys are joining in late or watching this as a recording, make sure you hit that like button on YouTube. These analyses do not just appear. I have to put in multiple hours and I have to do multiple iterations of these analysis. For instance, here you can see one chart of S&P, another chart followed by the futures chart, the Nasdaq, and other charts. So you get the point. Many hours of work goes into this stuff, and this is high quality analysis. As a matter of fact, we have been able to capture more than 15 trades so far in the last 3 to 4 weeks of these webinars, right? So if you are following them, you should be able to benefit from them one way or another, and I would request you guys to like them and share them so that others can benefit and we can grow our audience. Okay, thank you for the confirmation there, Jill. Let's head over to the last two pairs here. Mm-mm. And yeah, guys, very quick and small announcement here. It's not this one. I am planning to start this new batch of training program LT from this month's end, last week of January 2023. If you are already in the Elliott Wave video course and have completed it, then you are eligible, and you can send me the request from my website. There's a separate page for training program LT. I believe I can just show that real quick here. So here's the page under so this is the page. If you go to my website and go to courses and then training program LT, you can send the request here. Keep in mind, currently we are only working with people who have completed my video course. So getting back to our discussion, where were we? We were discussing or going to discuss Nifty 50, right? So Nifty 50, last time when we discussed, I clarified that no longs until it takes out the high, and the possibilities of short cannot still be avoided because it still may be following the WXYXZ correction. So this is your WXYXZ. So now what is happening here is that one second, this is not X, this is. So before I move on further with this analysis, let me just quickly clarify what WXYXZ is. A WXYXZ is a corrective pattern in Elliott Wave terminologies, which basically suggests that the first leg in 3 is called the W, the next leg in 3 is called the Y, and the last leg in 3 is called the Z. All these 3 legs are joined by connectors X, or also called the connecting wave X, right? So this is your first connecting wave X, the second connecting wave X. So now the thing is that these connecting wave X can sometimes become complex. So long story short, Z is still possibly in play. Not possibly, I think very heavily likely that it's in play, right? So based on that, my understanding is that this market either can go straight down or it can go roam sideways a little bit here and there and then down. So overall, the swing perspective on Nifty counter is bearish. So for me, at least, maybe in intraday, it's another story. I can see longs and take longs, but swing wise, this counter is still looking for bearishness. And if the major move in S&P, because S&P has been hovering sideways for a long time, so whenever it breaks, and if it breaks to the downside as we expect a major move. So if that happens, then also I think that will have an impact on Nifty as well. So that was my quick take on Nifty 50. For now, I believe more downside is on the cards. right? If you are interested in targets, we can just quickly measure the wave W. There are multiple ways again. I will not go into too much detail. Not much point of calculating targets. Generally, we measure the internals and other stuff. So, but for the sake of talking minimums here, this looks like 1:1 for W's length. So around 17,730 at this level is the minimum target. We expect the market to go lower and further downside as a side is possible. So that was my take on Nifty. If you guys were clear on it, do type in clear. And last chart before we close our discussions, let's quickly head over and have a look at BTC. Nothing to add here. Again, it is literally the same as the last time. It is still sideways and still not giving any clarity of what's happening. But just to reiterate myself for the people who are joining in new or might be watching it later on, in BTC, our understanding has been that this market has been in a downtrend, and the current leg, this corrective structure, is a continuation structure. So continuation means that it will do something in the sideways movement and then fall. So we were able to identify this point as the end of the corrective structure, and that means the market was open for bearish movement from here. From then on, the market has fallen a little and then remained sideways. So either it will follow from here and follow the downside from here, and if it does that, our immediate targets were at 15,250 and 14,800, roughly speaking, which could be followed by much lower targets, by the way, right? And the next thing that can happen is that it can go up a little bit. Upside movement is definitely not out of the question, which will still again be followed by downward sell-off, right? So basically, long story short is we are not interested in any longs. Any longs, if it happens, then we will only be interested above the level of this high of 21,450 something, basically above this level. If the market does not take out this level to the upside, no point in taking longs, only look for shorts. That's my analysis on this counter. So guys, that was all for this analysis today. I hope you guys enjoyed it, and request again for you who are joining in late or watching it as a recording, please make sure you are hitting the like buttons on YouTube and whatever platform you are using, and make sure to share the content after you have watched it with at least 3 of your circles. If you are using Twitter, share it on Twitter. If you are using Facebook, on Facebook. If you have a group of traders like on Slack, Discord, Telegram, or whatever group you use, please kindly share it there. That definitely helps the channel grow, and as I said so many times, it takes a lot of effort to make these webinars, so I will appreciate you guys helping me out and reaching more people. That was it, guys. I'll sign off now, and you guys enjoy the weekend. Talk to you guys in the next one.